What's up everyone? Tom here with another video. Today we'll be talking about the most relevant stock market news for this coming week, along with our technical analysis thoughts on the S&P 500, NASDAQ, dollar index, and Bitcoin. The stock market has confirmed a new high on the weekly. So what does statistics say is going to happen next? Let's take a look together. Stay tuned. So as we like to do together on this channel, we try to take the complicated in the stock market and simplify it together. One of the ways we can do this is we use a technical analysis approach that I call the top-down method. And that's where we walk through the monthly, into the weekly, into the daily, down through the timeframes to try to identify the key market levels that you should be looking at or could be looking at over the next coming week into months. But before we do that, let's take a look at what happened last week in the markets. So obviously it was green. We all know that, and we saw a lot of bullish momentum come back into the markets on all-time highs. In uncharted territory, it becomes an idea whether we want to be in the market indices or we would prefer to be in specific stocks. And obviously over the last 6 months, it's been all about the tech. I'd just like to say when we look at a heat map like this and we look at what happened last week, obviously we saw the tech stocks do very well, but we saw a big pickup in things like Coca-Cola, Walmart, some of the banks, some of the value stocks, and I'm noticing a clear trend that hasn't happened yet, and that is that the healthcare and healthcare plans, diagnostics and utility sectors are coming under some pressure, as in they're definitely not the flavor of last week or the flavor of the last couple of weeks. Whenever you're doing analysis for specific stocks, you should always be looking at sector rotation, and one of these heat maps is a great way to do so. So now that we've hit all-time highs on the stock market, how do we identify where the market could be going next? Well, one of the best ways is to actually use statistics to find out what happens on average once we make these new highs. And it turns out that stocks tend to add an additional 9.2% over the next 12 months following a record high. Now, obviously, this would mean that we've got more room to grow. And I do believe with the Fed's intervention and everything that's going on right now, including the price action, we do have more bullish momentum left in this market over the next 12 months. We're in an election year, and we all know that means usually a bullish market. And we'll be talking more about that in tomorrow's video. So make sure you subscribe and hit that bell if you're interested in knowing more about what happens in a lead up to an election on average. So as I said before, the healthcare sector is not doing as well as the rest of the market. Here we have some research conducted by Yardeni, and actually it shows that the stock market in terms of the overall index has outperformed especially the healthcare sector in the last couple of weeks. We've seen a bit of a pickup in the financials, but the healthcare sector is now lagging it. So possibly, as I said, that is a scenario that you could be looking at and looking for opportunities within that sector. But what's been happening in the technicals? Well, in the technicals, we've been seeing a little bit of interesting movement in the VIX or the Volatility Index. As I've said on this channel for a long time, when we're above 20 on the VIX, we still have the possibility of having an incredibly bearish kind of flash crash at any point in time. Why is this? Well, when the VIX is higher, it usually points to uncertainty about the markets, and we haven't really had a bit of a dip now for a few weeks in the S&P 500 and NASDAQ. Now, a lot of people will say, well, what do you expect from a dip? Well, I just expect the dip to go back to the general trend lines, things like the moving averages, like the 20 on the weekly and those type of things. I'm a big believer that when we make all-time highs on a stock market, usually we come back down and we test those all-time highs, especially on the S&P 500. That's what statistics have told us over time. So could this be the week that we start to see weakness? We are coming into September, and September is historically a weak month. But on top of that, the VIX has been going into some kind of spiking, especially off speeches like Jerome Powell's speech last week. We can see here on the weekly, we did have quite a lot of spike. And if we go down onto the daily, we'll notice that on Thursday during the speech that we live streamed on this channel, we did see a spike up to 27. And then of course it sold off after that in terms of the VIX or volatility came back down. We've got the Jackson Hole Symposium over the weekend that's recurring, and this Friday will be the non-farm payrolls. So just remember when we go through the economic calendar, the non-farm payrolls event is always full of big movements on the smaller timeframes. And that type of event is not really one we want to trade, but it's certainly one that we can then trade off based on what happens after that event. So So that'll be happening on Friday, and we will be live streaming it on this channel. So what else happened last week that gives us a bit of insight into what's happening on the stock market? Well, one of those things was the dollar continues to slide, as in the US dollar here on the right. This is the weekly chart, and we can see that it's going back down to the 92.16, but this is an incredibly weak and bearish close. We've been having a bunch of rejections on the weekly. In fact, we were rejecting upwards of the 93 plus zone for the last 3 weeks to 4 weeks, and we talked about how that was actually a strong thing for the dollar. But after the Fed came out and obviously said that they wanted to action 2% inflation and that they weren't going to get rid of really any of the underpinning kind of ideas of fiscal policy, that really tanked the dollar. And while we saw some initial strength, and let's go down to the 4-hour and see that, we saw that initial strength off the meeting, that doesn't show us enough, and we did not make a new high. The good thing with technicals is, while this looks incredibly good opportunity and you could have thought I buy it and close it up here, until it really closes above this zone and more importantly above this 93.88 that we've been targeting, we are not in a defined uptrend until that happens. We're still in a bearish downtrend. So this week I'm really looking probably, will this support hold? If we get underneath it, obviously we could see further shorting of the US dollar, and we'd be looking for the standard kind of retracement back up to this zone here. If it does close through, lightning bolt down, and continued weakness to the next point. One of the ways that you can find the next point whenever you're doing analysis using something like a top-down approach is you go to the monthly and you check whether these zones make sense. You can see why this is strong support. Look over here on the left-hand side. Previous resistances acted as support. When it broke through last time, where did it go? Well, it went down to the 88. And we can see why that was, because look over here on the monthly, we had previous resistances. It just shows you how it's so important. If you're not looking at the monthly, not looking at the weekly, not looking at the daily, how important is that? You can see those zones, and you know that if we get through this key zone here, we're more than likely going to continue the slide down. So how do we deal with that? Well, one of the ways we can deal with that is this chart on the left, and this is gold. So I'm a pretty big bull on gold. I'm fairly bullish on it still, even at these levels. And obviously we saw a blow off a few weeks ago. And usually after a blow off, we get the kind of events that we spoke about. You'll notice I have this highlighted box down here because this is like a target zone that you're looking at, potentially looking at buys, just because it's around that 1900. And after the Fed Powell speech at the Jackson Hole Symposium, basically we did see some bearish movement on gold after the actual speech happened. Now we've seen bullish movement, and when we go down to the daily closed above all these previous closes, which kind of signals more bullish movement here from gold. Obviously, we'd like to see gold close above the 2000, but this week we might see something like this, where it goes up to the 2000, comes back down, finds support here, and then if it gets through that 2000 again, we're most likely going to target the 2050. And that's just because gold likes moving in $50 chunks. Notice the 1900, the 1950, the 2000, and the 2050. Remember, gold is being traded like human psychology. In human psychology, we love round numbers. Before we get into the S&P 500 and NASDAQ, I also wanted to talk about Bitcoin, because Bitcoin's being traded very much like, of course, gold. It's being traded as a hedge against the problems in the economy and obviously the problems in the dollar. So here we have Bitcoin on the weekly, and I think everybody would agree that this 12,000 is incredibly important. The other thing is that we have not seen a body close, as in a close of the candle above the 12,000 on the weekly. But I think we're starting to see some bullish signs on Bitcoin with some nice structure. So let's take a look at that together now. Bitcoin likes to trade within the $500 ranges. It buys off 11,000, 11,500, 12,000, all of these key levels always act as support resistance. Notice how it almost gets that 12,500, gets to 12,470 and just sells off. And that's because I guess you would say the whales are having or attacking these zones. So this is clearly a pretty nice kind of bullish movement from Bitcoin. We are seeing some strength coming into it over the last couple of months. And I particularly like this little double bottom and structure formation that's forming here. So I like what's happened on Bitcoin here with the double bottom, the intervening trough, and obviously this dealing structure through here where it's getting through all of these dynamic moving averages. Things like, of course, the 50 moving average, the 200 simple moving average, and the 20 on the 4 hour here. and we're seeing further bullish movement coming off that zone. It's acting very technically, and the next stop for it, of course, is upwards of this 12,000, 11,900 from a technical perspective. So Bitcoin's looking bullish, just like gold, for the coming week. So what about the stock market? What do we do now that we're at all-time highs? How do we predict or project kind of ideas of where the stock market could go? Well, obviously we know where the dips could go. The dips could go straight back into the 33 kind of 90 zone. We will see pivots opening up at the next month. We'll be covering that on this channel. And we've got a bit of a Fibonacci extension off the last pullback where we came from that kind of 3230 down to the 3,029.50 area. When that happened and we take this fib extension out, it's kind of predicting that the market could get to a 2618 fib, and that would be saying around 3,673. The market kind of respected the highs a little bit for a small amount. It coiled, it obviously blew out. And what I would probably be more thinking is that now we're so far away from this 20 moving average, the market likes to dip into that zone. We also know that the market, whenever it makes new highs, often likes to come back and retest the zones. We talked about that at the more significant kind of breaks, like the breakthrough of this 2950 last time. It dipped back, tested, and then went on to the next move. That happens pretty regularly in the markets. We can see here where it got through that 2,100 zone, it came back and tested it. So I wouldn't be too concerned about feeling that you missed out if you weren't in the market at this stage. But I do think that the next dip will be bought very aggressively with the amount of money that's on the sidelines. So let's just go through the monthly into the weekly into the daily now. So what are we seeing on the monthly? Well, the monthly is clearly incredibly bullish, and it looks like it's going to close well and truly at a new high, and very, very bullish indeed. We also know that from a monthly perspective, if we're putting on a horizontal line, we had previous closes kind of all around this kind of 3270 line. So I'll put that up there just so we know it's there. Remember, it did help us during the crisis to see where the body lines were previously and where the body lines were during the crisis before the Fed stepped in. We go down to a weekly. What are we seeing? Well, we're very far away from the 20 moving average, just like last week. We're moving at a bit of an incredible pace, and in fact, the pace may be a little bit too quick. I'd like to also point out that we had a very nice big bullish candle last week, a very aggressive one. Now, what happened last time after we got aggressive ones and a gap? Well, we got a gap, followed by a pretty bullish candle, followed by an extreme bullish candle, and then a flash crash. Why is this important? Well, when the market starts to move very quickly, and we'll look at this in our NASDAQ analysis, whenever it moves that fast, that quick, usually there's more chance of a mini blow off on the smaller time frame. So the weekly is very strong. Obviously, we're at that 3,500 kind of psychological level, but at this stage, we're not seeing any bearish signs at all. It's just bullish signs for now. What about on the daily? What happened on the daily? Well, of course, there was Fed Chair Powell's speech. We're still quite far away from the 20 moving average. Where is the 20 moving average at the start of the week? It's right around those previous highs. So of course, if we did see a bit of a dip here, we'd be going straight into the previous highs and straight into what we know has acted as support multiple times through this bullish momentum. And we've covered that on this channel together quite a few times. You'd also note that the 50 moving average is right around those kind of previous big body closes. But I think the 3,400, if it was to come down, will have strong buying pressure purely because of the sentiment being so strong in the market, and also the little bit of coiling structure we got around here, plus there'll be buyers at the previous resistance, which will be now acting as that technical support. Where the market gets a little bit more interesting is probably when you look at the futures on the smaller timeframes, and more importantly, the NASDAQ. So the 4 hour here is just really showing bullish momentum into the last end of the week. We did see some strength coming into the unloved sectors near the end as well after Fed Chair Powell's speech. And that just shows you that sometimes sector picking and picking specific areas that are unloved can pay off. Now, obviously everybody's in the tech right now, but when we get dips, the tech will sell off faster than the value stocks or the unloved sectors. So sometimes it's worthwhile doing that analysis, finding out the sector you're interested, going to Yardini, coming to this channel, that type of stuff. It's definitely worthwhile finding that out and being a little bit of a, not so much value hunter, but value growth hunter, I guess we'd call it. What else are we seeing on the S&P 500? I just want to show everybody this trend line. Now, I'm not a huge fan of trend lines because because you can pretty much curve fit them throughout time. But look how this has been on the weekly. So we can see the previous kind of resistances, previous resistances, previous resistances, and then we've just hit it at the end of last week. Could this be the point where we do find resistance and then we have some weakness coming into non-farms? Previous examples would show, yes, it is the weakness point. And remember, we did see that sell-off at the start of February, and we saw that sell-off again, of course, in the February point. And previously, it was actually interesting at the end of the year. But we've hit it early, and this has been an aggressive run, and we have hit the top end of this trend line. So we'll see if that acts as resistance, and I wanted to point that out to everybody on the channel. So as we all know, the NASDAQ is just vertical. It's every week's been pretty much buying, followed by little bits of pullbacks. And on the monthly, the clear horizontal line is we have closed right here, pretty much at the 12,000 for last week. We're right on that key psychological zone. So the NASDAQ basically has broken through that 1618 fib extension. Here it is on the channel. And of course, we've got that 12,000 key psych being hit, and we're still very, very far away from that 20 moving average. So it's still a very aggressive market and potentially moving a little bit too quickly. The Apple stock split is also going to happen this week. And of course, that means that we may see that buy the rumor, sell the fact kind of event. And again, we're starting to find a little bit of struggle point right here. I think the main kind of support lines still remain around that kind of 11,200, 11,000 area where previous resistances act as support. We've got the 20 moving average. And of course, we'll look at the pivots when they do open at the start of next month. I think the NASDAQ was probably more interesting during Jerome Powell's speech. We did see quite large daily movements. We basically saw the market go up to 12,000, almost 50, and then all the way down to 11,836, which just shows that when the jitters start to get into the market on the NASDAQ, it will move much quicker than the S&P 500 stocks generally. The NASDAQ stocks are the most bought, and they have the most to fall if we do see dips throughout the time. So just remember, the NASDAQ will give you bigger gains, but it will also give you bigger risks, of course, to the downside because of the overbought nature of all the indicators currently on this chart, and of course, the overbought nature of the stocks fundamentally right now. What about for the week ahead? What are we seeing? Well, there's a bit of odd news at the start of the week, and you should have something like this, which is the forexfactory.com calendar. It's definitely worthwhile checking out. And we have the non-farm payrolls, of course, at the end of the week, which will be live streaming on this channel. So definitely subscribe and, of course, hit that alert button if you haven't already to check that out. You can also use the Market Watch one, and I like to use probably both the calendars just so you capture all the news. This is the Market Watch for the US news, and you'll see here that it's just really all about some construction spending, manufacturing, factory orders. I wouldn't worry too much about that. It's really just all about the Thursday into Friday news. So I hope that helps everybody today. If it does, give us a big thumbs up if you're enjoying it. And I just want to give a quick shout out to the community. You guys have been awesome, and I'm really appreciating the support on this channel. Just remember, we do have a giveaway at 20,000. We're going to be giving away $500 Australian to a lucky viewer just for subscribing and possibly following us on one of the social medias down below. Thanks very much. Good luck with this week, everybody, and we'll see you in the next video. Bye for now.